It could never happen here, they said. Our currency could never fail. Soon, things would turn around and return to normal. That is what every government deals with at some point. Every fiat currency in the history of the world has failed, not gently, but in a spectacular and painful fall. The causes could be different, but the general effects are the same. Depreciating currency puts people into a state of panic, can't plan for tomorrow. Businesses in fear, debt rises, deficits worsen, panic sets in, and a very small group of people gain tremendously. Think it can't happen where you live? Think again. You came here for the truth, so let me unveil that for you. We're going to start today by looking at what's going on in Venezuela. I'm going to show you that. I'm going to start to unfold what's been happening as well in the bond market and stock market and realize that there is a euphoria that is taking place at a time in which generally the economy is extremely weak. And that is usually not a good sign because whenever there are disparities, we always revert to the mean. That could mean something for different places around the world and different sectors of the economy, and all these things are something that we only know after it happens. However, the trends are definitely in, and we'll be talking about some of those today. So let's begin. All right, I wanted to begin by taking a look at my portfolio. You can see this line right here. It's been going up like crazy. Oh, wait a second. No. Maybe that's the Bitcoin price? No. Maybe that's Tesla stock? No. This is the Café con Leche index. And basically, as they say here, measuring hyperinflation 1 cup of coffee at a time, and that is in Venezuela. So how do you get inflation statistics when you can't trust the government's numbers? They can't be calculated anymore. And after a certain point, it kind of doesn't even matter anymore. But you look at this in something simple, a commodity that is widely available, that is very similar in different places. This right here is a great way, of course not a complete way, but a great way to be able to determine how fast prices are moving. And you can see this chart right here. I know you're not going to be able to see, all the writing there, but imagine this. That's 1 year. That's 1 year. So let me just zoom out to give you an idea of what the numbers look like. Annual, on the top right corner, annual inflation rate, 3,000%. And then you look on the top left, the most recent price is essentially 3 million bolivars. And that's shocking. Let me show you the all-time. This brings it back. And that is, it's hard to see on here, I think 2016. So from 2016, it looks like a flat line. But I was covering on this channel during these years. And it was also a spike high, just like you're seeing on the right-hand side of this chart. But compared to the rate at which we are seeing today, it seems like nothing back then. And the currency was obviously doing so terribly throughout this period. And now they're trying to measure it in however they can, but I mean, it really doesn't make sense anymore because the currency is essentially worthless. They tried to actually act previously. I think I have it up here somewhere, right here. I was thinking about it to myself. There had to be a time in the past when Venezuela knocked some zeros off of their currency, and in fact, as you can see right here, back in August 2018, Venezuela knocks 5 zeros off of its currency. 5 zeros. And did that fix the hyperinflation? No. And the only thing that it does do is essentially makes it cheaper because you don't need to print as much paper, as much ink, trying to get that out there. The machines, there were so many zeros. I remember covering this. There were so many zeros, so many digits on their screens that a lot of these shops couldn't even support it. Imagine that. It costs, let's just say, I don't know, $1 trillion or whatever, trillion bolivars. The actual cash register wouldn't be able to type in $1 trillion. So they couldn't do it. So they was causing all kinds of mistakes and problems and errors and all these things that they decided, okay, let's just chop up 5 zeros. But now that's increasing again. It's getting worse again. And right here, you can see it. Hyperinflation pushes Venezuela to print the 1 million Bolivar bill. 1 million Bolivar. Unbelievable. The largest in the nation's history, 1 million note is worth only 53 cents in US dollar currency. And that just gives you an idea of where it's been over the last little while. Here you can see it. This is the one, the furthest one to the right, 1 million. And what's it going to be in a year from now? Will it even exist? We don't really know. So the point I wanted to make here is simply that things happen very fast, very fast. I have shown you the examples throughout history where at some point, you're saying, well, the inflation rate's starting to pick up, it's 3%, it's 5%, it's 8%, but it's nothing crazy. And then you look at the next year and the next year. And I'm talking about you look at this historically throughout these different countries, wherever that might be, and you see it goes from 8% to 42% to 150% to 1,000%, and then suddenly it's uncontrollable. Currency fails, governments fail, they default on their debt, all these kind of things. They have happened everywhere. Don't think they haven't had, well, it hasn't that one place and there's this, rare example here and there. All fiat currencies will fail. So if you're asking me, well, then should I buy stocks? Should I buy this? Should I buy that? I cannot give financial advice, but what I will tell you is that fiat currencies are in fact garbage. And knowing that, it makes a lot of sense to invest in something real. Whatever that means to you, that's what I believe. So also people believe that, well, if I just allow a hyperinflation to wipe out my debt, I'm not going to have a problem. But if you see the people that are dealing with the crisis in Venezuela, that $3,000 on their credit card or whatever it is not going to make a big difference compared to the strife that they are dealing with. If you're dealing with the hyperinflation, you're not going to be okay because, your debt is wiped off. Please understand that there's so much more to it than that. One more quick point I wanted to make about that is simply people believe that, well, don't worry because my debt will be wiped out in hyperinflation. I think it's important to note that they can absolutely and most likely will, and in many cases they've done this, where they peg that to the inflation rate. So they essentially say, well, if inflation is going up by 100%, well, you don't owe $3,000 anymore. We're going to make sure that you owe whatever the equivalent of that $3,000 is as we go into the next year and the next year and so on. They'll make you pay whatever they are owed. You're not going to get away with it. That's just the way that it works because this system is set up to enrich the few at the expense of the many. All right, check this out. Bond traders go all in on U.S. Treasury markets big short bet. All right, repos signal a rush for 10-year notes as part of short wagers. Round of Treasury auctions set to test demand at higher yields. They thought it would not be possible to get higher yields, but as you can see, it has started to increase. In fact, it's the highest since February 2020, and it's going up. It continues to do so. Jerome Powell, so there's nothing to worry about. There's a lot of tinder being put now on this fire for higher yields. The question is, what is the point that higher yields are too high and really put pressure on risk assets and push Powell into action to try and tamp them down? So I don't know exactly what the Federal Reserve is going to do, but there's been a lot of speculation about yield curve control. They are going to do this in order to ensure that it's maintaining its levels that they deem are healthy. But as you can see with other countries, it actually doesn't really work well. Just like trying to buy up all the assets doesn't work well either in order to facilitate their fake goals that they suggest. But they might do it anyway. Big short wagers for higher yields persist as financial conditions hold stable. And you can see at the top there, you're looking at the 10-year Treasury yield, and then the financial conditions index below that. But all you need to know right now is that there's a lot of eyes paying attention to what's happening in the bond market. And if this continues, it's going to be very chaotic. Retail buying over the last 3 weeks was 40% higher than in 2020. Average weekly net purchases of U.S. equities by retail investors. Of course, as you have seen with everything with Robinhood and all these trading platforms, zero commission and so on, it really stimulated people, particularly from March 2020 and onward. That was quite obvious. I just wanted to show you, this article is talking about how retail investors have been getting in like crazy. They've been ignoring all risk. They haven't been diversifying as they need to and so on. The numbers are all behind that, and you can check out this Bloomberg article if you're interested. But essentially just wanted to point out that there's maximum risk taking today, and that's going on all over the place, but it's nowhere greater right now than with retail investors. High-flying stocks are great to own when there's still wind beneath them, but when that breadth thrust is withdrawn because of liquidity, they often fall much faster than they rose. Holding such high flyers is a significant risk to concentrated portfolios, and frankly, it's a risk for the confidence in the entire stock market. Of course, that has happened right now. I mean, it's crazy to see how much interest there are in a few select names. Now, that has started to wane a bit, but it's very clear where all the eyes are on today in the stock market. When you start looking at things and saying this is going to be the greatest fill in the blank ever, and then running up its valuation, you have to understand there are no one-way trades. Trees don't grow to the sky. So when something goes parabolic, it tends to come back down to earth at some juncture. And I just point this out to you because I have basically said this many, many times, but it was put really succinctly here. And so that's why I wanted to mention it. And it's pretty obvious. You look at the risk that people are taking and what happens over time. And it is very clear to me that things always end badly for the vast majority of people. They don't want to admit that, but that's the way it is. I got some information here about Canada's housing market, and these articles do cover not just Toronto and Vancouver, of course. One point I wanted to make right here before I start, because I know I get a lot of people saying, oh yeah, well, you're just cherry picking. You're looking at Toronto, you're looking at this and that. Okay, look, one example. London, Ontario, not London, England, London, Ontario. Okay, it's a small town outside of Toronto, and this place right here, I'm talking small, it's a small city, okay, and it has population significantly less than Toronto does. There's more to it than that, but the point I wanted to make here is that the last time I checked the numbers, I haven't checked it in the last few months actually, so I'm sure it's even hotter. But the prices in that area, around that area of Southern Ontario, have increased 25% year over year. The prices are going berserk. Okay? It's not just one place or the other. Understand that wherever people can get in, they're just getting in, they're piling in. And real estate is, I don't want to say it's hot right now. It is gone beyond that. Okay? It's going into a territory it has never been before. This is worse, in my opinion, than 2017. You don't look at just the monthly change and so on as they show you here in this chart, house price is accelerating in Canada's most expensive markets, but understand the euphoria today. 2017, okay, well, it's the foreign buyers and blah, blah, blah. This is much more, I want to say that same euphoria we're seeing with the retail investors going into the stock market, there's something really, really wacky about what's happening today in real estate. And it is just shocking to see what the people in the industry are saying. They will never stop. It's never going to go down. Prices will never go in any other direction. And I mean, that is just... The people that say this should be much more cautious about the words they use, because people are going to get destroyed at some point. They're taking on too much debt. That's the problem. They're taking on too much debt. Do you need to live in a place? If you need to live in that area, do you need to live in a place that has 4 extra bedrooms or has, this big of a backyard and this and that? People don't need all these things, okay? Or you can move to an area where it's much more reasonably priced. But if you're taking on more debt than you can actually afford, that is very dangerous. And I don't care about, that makes me a pessimist and negative and all that. I really don't care, because it's so key and integral to watch your spending, to watch your debt load, and understand that at any moment, if interest rates decide to rise and you are out of a pair of underpants, that's not going to be very good. It's good for Fruit of the Loom, but it's not very good for you. It's possible, given the recent increase in prices, that some people are speculating about further increases in prices. That was missing in the market until now. So watch out. That's all I'm saying. The first and most effective thing policymakers can do is to stop telling Canadians that there's nothing to worry about when it comes to our housing market. Right? Absolutely. That's what they say. Oh, don't worry. Nothing to see here. Nothing to see here. Everything's fine. Everything's fine. So what happens? The real estate agents, the brokers, everybody involved is saying the market's never going to go down. You don't have anything to worry about. This is just going to continue on. So of course, the people fear missing out and they want to get in on the action. That's very dangerous. And it comes from all levels. And why? Because so many of these people are relying on that to continue. Canadian mortgage rates are beginning to inch higher for the first time in the last year. And that is concerning, of course, but it's still historically extremely low. And I just wanted to make that very clear. But if this continues for a little while, so now that they're inching up, this actually could create even more demand, because people think, if rates start rising, I can't afford it. Let me buy now. So that's going to put pressure. Obviously, inventory is very low, as they say. But if it goes up and continues to go up a little bit at a time, that's going to spook this market big time. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me by clicking a button on your screen. You could support the creator of this video. Thank you very much. If you want to learn about e-commerce, you can do so for free. You don't have to pay anything. It's available to you at the AmazonGPS.com. There are over 9,000 people that have signed up to that course. Very few have actually taken any action. If you want to learn about the financial system, you could do so in my 2 books. Very simply, very easily. Check them out at the link in the description. And if you have not seen this, you definitely want to check it out. Click it, and I'll see you there.